Yes, you can
Yes,
see my screen.
yes, we can.
All right, all right. Well, we're going to talk about tonight winning with the financial needs analysis, part four. This is the ABCs of financial protection. And as Dr. Harris stated, I am business director Eduardo Sprague, and as always, excited about sharing this information. If something unexpected happens, like illness, job loss, accident, or death, you and your loved ones won't face a financial crisis. And that's a big deal. Financial protection is definitely serious. Unfortunately, a lot of people are not totally financially protected. That is why the financial needs analysis that we use is so important because it covers every aspect of the financial protection that you need to protect your loved ones and protect your family so that if any financial crisis occurs, you are protected. So let's look at basic financial protection and what it entails. So these are the key components of financial protection. The first, which is one of the number one things that most people do not have, is an emergency savings or an emergency fund. An emergency fund or emergency savings is simply setting aside 3 to 6 months worth of living expenses. So you should have in an account 3 to 6 months of living expenses in the event that any emergency comes up. You can stay afloat and manage for at least 3 to 6 months and figure things out. And that emergency fund is very crucial to having the financial protection in place. To me, it's the first line of defense for financial protection. Typically, because I say that because a lot of times when things happen before they snowball into something big, is maybe something that you can make adjustments to within a month, 3 months, 6 months. So if you have an emergency savings, you can sometimes salvage a situation before it gets out of hand or before it blows up out of proportion. So having that emergency saving keeps you afloat during job loss, medical emergencies, or um, sudden expenses. So anything that pops up, like I said, that may be short term, even your vehicle breaking down or you getting sick and being a little sick, longer than you intended or expected to be sick or whatever, then that 3 to 6 months is a buffer that will keep you protected and won't cause a financial hardship to your family. So the emergency savings is definitely a key component. Insurance. Insurance is a tool to transfer financial risk to an insurance company. And these are the common types of insurance. Of course, health insurance covers your medical bills, and most people that are working, fortunately, have some type of health insurance, which is good because health insurance definitely can keep you from having a financial crisis and give you that financial protection that you need in the event that you have a health crisis or a health situation. Life insurance. Life insurance provides for your family in the event you pass. So if you pass, life insurance is there. But I like to also add that life insurance is not just in the event that you pass, because a lot of the products that we write have life products that we write have let me say all of the life products that we write have living benefits with them, and living benefits will cover you in the event of a critical illness, critical injury, chronic illness, terminal illness, and with some companies, even Alzheimer's. So the life insurance will protect you in the event that you pass away or have something catastrophic happen that will allow you to still have that financial protection in place. So life insurance is for more than just the death benefit, or like we like to say, life insurance is for more than just funerals. But the key to life insurance is having adequate protection, and that is based on what we call the DIME, DIME, which is debt, income, mortgage, and education. So of course, debt is understandable. You want to have enough to cover your debt. Uh, then your income, at least 10 times your income, sometimes maybe 15 times your income, and then enough to pay off your mortgage and enough to pay for your kids' college education. That way, that education space is so that you don't, if something were to happen to you, your kids don't suffer because you passed away as well. They're already gonna suffer the loss of you passing away, and then now the dreams and things that they wanted to come to pass that you were going to provide for them would be not available. So life insurance is a big one here, and it is definitely there to give you that financial protection to keep your family going in the event that something happens. Disability insurance. Disability insurance is income protection uh, for you for you, so you can protect your income in the event that something happens and you're out of work. There's short-term disability insurance and long-term disability, so it can cover you for after 3 months of something going on, all the way up to a couple of years if you have long-term disability. So disability insurance will protect that income, and you can continue to have something coming in cash flow wise so that you can continue to meet the bills and take care of the bills while you are recovering from whatever is going on. Property insurance protects your home and your possessions. So property insurance is also known as homeowners insurance. It is very critical in protecting your home and your possessions. And many people have property insurance when they buy a house, or they should. And typically, they definitely have it at least when they get the initial mortgage, and hopefully they keep it and keep it up and up to date, because in the event of something happening to your property, you want to have it protected because it can cause a financial hardship or a crisis if you have something major happen in a storm or even by accident with a fire or something like that. So property insurance um, protects your home and your possessions. Also, under property insurance, a renter's insurance. Renter's insurance is very critical as well. If you don't own a property, however, you are renting, whether you're renting a house or in an apartment, you definitely need renter's insurance. And I think one of the insurances that a lot of people do not have and do not get is renter's insurance. And renter's insurance will protect you in the event you are renting a space and something happens, and it'll cover your possessions and things like that so that you can be protected and you don't fall into a financial crisis because of something that happens and you are renting somewhere. And then auto insurance. Auto insurance covers car accidents and theft. And by law, everybody should, if you're driving a vehicle, you should have auto insurance. So auto insurance covers accidents and theft. And it is good to make sure when you have auto insurance, you are properly covered. I think if they haven't gone up, the minimums are really not enough for most vehicles that are on the road today because of the price of the vehicles. Now, auto insurance has definitely, you need more than, I was going to say it's definitely gone up, but you really need more protection in the auto insurance space. But you can have the minimum coverage to meet the state law requirements, but you definitely need to make sure you talk to your insurance agent and make sure you have enough coverage to protect your vehicle adequately, as well as those that are in the vehicle as well. Debt management. So another part of financial protection is managing your debt. Avoid high interest debt. That is the number one thing. The number one thing that puts people in a bad situation debt wise is high interest. And interest is the name of the game. Most debt that you're getting into, they're trying to get you into the highest interest they can possibly get you in so that they can make more money off of you using the credit card or whatever, the loan or whatever. So pay off credit cards and loans promptly. Don't let them linger and continue to pay that interest. I said it just a minute ago. The name of the game is interest, and continuing to pay and pay and pay on the loan or credit card. You're just continuing to pay into interest, and that alone can sometimes create a financial hardship or financial crisis for you. And you have to protect against that by number one, like I said, avoiding the high interest debt, and then of course paying off your credit cards and loans promptly, and don't let them linger. And you just continue to make the minimum payments because it can backfire on you. And then maintain a good credit score for financial flexibility. When you have a good credit score, if you maintain a good credit score, when you have one, then you have a lot of flexibility, financial flexibility when it comes to borrowing any kind of way, any loans, car loans, home mortgage, anything that you do. If you have good credit, you have a lot of flexibility and you can get the best rates. So which keeps you out of that high interest debt and puts you in a better situation to manage your debt and have good loans that will definitely work for you. So making sure you maintain a good credit score is very important to managing your financial security and financial protection. Retirement planning. So this is a big one that a lot of people do not have, unfortunately, a retirement plan. I do a lot of retirement planning, and a lot of people are not prepared. So invest in retirement funds like your 401k, your pension plans, your IRAs, your IULs, things like that. You want to definitely prepare for retirement because it is better to start early where it doesn't take a whole lot of money and you have a lot of time than to wait until you are close to retirement to start saving, because typically you're not going to be able to save enough money typically if you wait till latter years to start saving for retirement. The earlier you start, the easier it is to save for retirement because you give your money time to grow and compound. If put in the right vehicles, you can definitely have some money for retirement, but you have to plan ahead and invest in retirement funds. I've had many people tell me, oh, well, yeah, I'm too young right now to start talking about retirement. You're never too young to start talking about retirement. And actually, retirement is not an age, it's a dollar amount. So if you can reach that dollar amount, it doesn't matter what age you are. If you have enough money, then you can retire whenever you want to retire. So having a retirement planning ensures financial security in your latter years. And that's what you want. You want to reach the point where when you reach your latter years, you don't have to wake up and punch the clock and go to work anywhere. You are actually retired where you can do what you and your money will allow you to do. And that's what actual retirement is. A lot of people make a lot of excuses about retirement and, oh, I went back to work because I was just bored at the house. No, you were not bored at the house. You didn't have enough money to be at the house. So you needed to go back to work to supplement your retirement with another income so that you could make it from day to day. And of course, most people are not going to give you the reality of their situation, but that is typically the reality that many people are not prepared for retirement. And so their financial security in their latter years is not secure. So we encourage you to definitely have your retirement planning as a part of your financial plan, and it will give you that financial protection that you need so that you can enjoy your latter years and not have to be working, because we are in an era now where many people are stretching their retirement well beyond 70 years of age because they did not have a retirement plan and a plan to retire or plan for the future. So definitely start early saving for retirement. Investment diversification. Don't put all your money in one place. How many times have we heard that? Easter just passed, and what we used to hear all the time, don't put all your eggs where? In one basket. So don't put all your money in one place. You need to diversify your investments so that you can have protection in the event that something happens and in one of the areas that your money is in. So you spread across different assets such as stocks, bonds, real estate, etc., to reduce the risk, because that's what you want. Diversification will allow you to reduce the risk, because now if you have stocks, bonds, real estate, and other investments, and then the stocks go bad, but see, you still have bonds, real estate, and other things, then you don't take a complete hit where you are definitely drowning, but you have your assets spread across different areas, and you have it diversified so that you can definitely continue to have that financial security that you're looking for from the investments that you have. So I encourage you to diversify in your savings for retirement, and I mean investment diversification. Have that for your financial protection. Estate planning. Create a will. Most people don't have a will, but create a will so that you can assign to where your assets will go when you pass away, and assign power of attorneys and beneficiaries. So all this is a part of estate planning that you need to put in place. And once again, most people don't have this area covered in their life, estate planning, because most people feel like they don't have an estate to plan for. So, but you do have things that you can put in your will, and you can assign a power of attorney and assign things to different beneficiaries in the areas where you have assets going on. And then insure your assets, and because this ensures your assets are distributed according to your wishes. I'm sorry. So when you have a will and you have assigned power of attorneys and beneficiaries for your assets, it guarantees that your assets are distributed according to your wishes. Because if you don't have a will, the state can end up determining where your assets go. So you definitely want to definitely have estate planning as a part of your financial protection. So why is financial protection important? It shields against unexpected expenses, number one. It provides peace of mind because when you see that all of your assets are protected, it gives you a peace of mind. And then it protects your family's financial future. So when you have your financial protection in place in every area, then if anything were to happen, your family's financial future is still secure and they can continue to have the goals and dreams that you guys had planned for prior to any emergency or anything. And then it helps maintain your standard of living during crisis. So when you have financial protection in place, your lifestyle doesn't have to change when something happens because you have the financial protection that will cover you in those areas. And then it keeps your financial goals on track. So when you have financial protection, your goals will stay on track, even in the event of emergency, even to death. If you have financial protection in place, your financial goals will still stay on track and come to pass. So remember, financial protection is important, and this has been a simple illustration of the ABCs of financial protection. So thanks for allowing me to share this information with our community, and we are looking forward to seeing you again very soon here at Totally Lit Financial Literacy Forum. You guys have a great evening. My time is up, and I thank you for yours. You guys have a great evening.